have a lot of numbers to reckon with. It is earnings season, and in fact, Asian Paints reported what was a weak set of Q4 numbers, with revenue down around 4.3% year-on-year and profit declining 45%. EBITDA also fell 15%. Domestic volume growth also showed some weakness. To talk more about the numbers, we have with us Amit Syngle, who's the MD and CEO at Asian Paints, joining in. Mr. Syngle, thanks very much for taking the time out. If you could just start with what's your strategy to revive category growth and volume growth?
So overall, when we look at the environment, I think the areas which we are working very clearly, one, we are looking at the entire area of mid-level to luxury housing in a very big way, where, the Asian Paints strengths of premium to luxury is very, very strong. And this kind of cuts across various segments, whether it is from a point of view of emulsions, waterproofing, construction chemicals, or from a point of view of wood finishes. So that is one big area of focus in terms of what we are taking in terms of what can be different and how we can really reinvigorate the category by bringing in more exciting propositions, looking at innovations which can come in that zone, first of all. The second area which we are working is in terms of looking at giving an edge to all our services. We have a beautiful painting services which we offer in terms of reaching out directly to the customer. We also have services for the overall projects in terms of a total assure service which we give. We are looking at amping all the services, given the fact that we feel that in the coming environment, services can really give you a very distinct kind of a flavor of growth in terms of what can be, and it would be also something different from what competition is offering. The third area which we are looking very strongly is the amping up the whole area of industrial paints, where auto and auto OE would be a very big focus in terms of what we want to kind of take, along with the areas of protective paints and powder coatings in terms of which we want to kind of focus. Currently for us, it's a small segment. It's something which we want to kind of grow big overall to that extent, given the trends which are very clear that the industrial paints seem to be kind of doing better for the last about 1.5 years in terms of what we are seeing. And that is why I think a clear focus which kind of comes in that area. And the last area is in terms of looking at really, getting strongly onto the emotional bandwagon of, the Asian Paints Connect with the consumer, where we've already kind of launched some very, very strong, communications right now, which is based on the customer connect, which is based in terms of our larger presence, which is based on our quality and innovation in terms of what we offer in the shape of warranty to that extent. I think these would be some forays which we look very strongly, which should be different from competition and something which would also invigorate the market very strongly going forward.
Sure. Can you give us a sense on what FY26 will look like, basis what you are indicating, basis the strategy?
So obviously, I think, one of the things which we are looking at is that the urban centers have been a little bit slow as compared to the rural centers, especially the T3, T4 cities have been relatively much better from the urban centers. One, we hope to kind of invigorate some of the demands and the painting kind of frequency which comes in the urban centers to that extent, and which would possibly lead to growths coming in urban centers, growths coming from projects and industrial, as I kind of really painted out. And then looking at FY26 from a point of view of at least single-digit value and volume growths, which would kind of pan out for us. And not only this, from a point of view of margin framework also, for the current year, we have kind of closer to about 18% PBDIT margins in terms of the console numbers as we see it. And I think going forward, given the fact that there are a lot of initiatives which are from the point of view of cost efficiencies and also from a point of view of backward integration in terms of what we are looking at, we are looking at maintaining our guidance in terms of the 18 to 20% from a PBDIT perspective overall going forward.
Well, that's very interesting because, it has been fairly intense when it comes to competition. What have you made of the competitive intensity so far from both new as well as existing players? Because, you've been caught on the wrong side here.
Overall, what we see is that in terms of the overall new competition which has kind of come in, we have not seen any differentiated strategy. I think the products are the same, in terms of what you're offering, the kind of services which are being offered in terms of the material delivery, things like that. There is nothing which is new. It is just everything is in a Me Too kind of a framework which kind of really comes in. And therefore, the only leverage you have is to kind of throw more discounts and look at possibly buying that sale out to that extent, which you have seen in the past from other players multinationals who have entered the Indian market, and where we're finding it that it becomes very difficult to really sustain that kind of thing. You could kind of make inroads for, maybe 2 years to 3 years if you are willing to kind of throw that kind of a money overall to that extent, but to kind of sustain that really and really kind of then upgrading your pricing and looking at possibly asking the retailers to buy at a normal price would be very, very difficult in terms of how it would kind of really pan out to that extent. Also, what we see is that in a market size of about 80,000 crores, if, overall new competition is able to garner even 4 to 5% overall of the share, it's not a very big share in terms of what you are able to garner to that extent, unless you become a player, quickly in terms of looking at 10 to 15% kind of a share which you are able to garner to that extent. So I think it will take a long time in terms of from a point of view of really bringing sustainability in terms of the actions you're taking, building the brand really in terms of what you want to do. Because what we've seen is that at Asian Paints, it's taken us good 8 decades to kind of really make the brand what we are today to that extent. And therefore, brand building doesn't come in very easy, and it kind of takes that kind of a time and investment which has to be there to that extent. So I think the big question mark is of sustainability is what I'm putting in.
Okay, so does this mean margins are disrupted for the industry for a bit for now?
I think definitely there is some disruption in terms of the overall margins, because if some of the players are trying to play the pricing game to some extent, possibly the price elasticity would kind of hold up to a certain level to that extent, which is there. So I think there would be definitely some price disruptions, and therefore I think as strategically we will have to look at in terms of how we are able to kind of shore up our treasure chest to kind of really fight some of the areas in terms of investments which we need into the market. And therefore, cost efficiencies, how you kind of look at your costing models, how you look at possibly your backward integration initiatives, which kind of gives you more muscle to spend in the market, yet maintain your margins, I think would be the game in terms of what we would like to play.
Amit, in the recent past, there has been an exodus of senior leaders in the company. There has been some leadership changes as well. What exactly does this signify? What kind of changes can we expect to navigate, through these times when it comes to leadership?
So I feel that today, it's always a dynamic environment in terms of what we would look at from a point of view of overall leadership and who's taking the charge and how we are kind of looking at taking the game ahead. But as what we have seen is that today, I think Asian Paints has a lot of battery of in-house people whom we nurture over a period of time, and we give them various exposures across various business and disciplines to that extent. And I think it's always a good idea that we keep on rotating people, giving them exposure. And to that extent, I think what we are proud is that today the internal factory of looking at generating leaders and so on and so forth is so very strong at Asian Paints that we are putting our best people across various kind of businesses to that extent. And going forward, I don't see any tension in terms of the areas of in terms of looking at good, capable leadership in terms of what is going to head the business and take it to the next level.
My question, Amit, actually was a very direct one. If you could, tell the viewers, will you continue as MD?
Definitely, I think I'm strongly into the game, and that's something which we want to kind of take it head on.
That's about you. And do you have the board's full support for it, Amit?
Absolutely, fully, 100%.
All right, take that point. Thank you so much for joining in, suggesting that the new competition hasn't been doing anything different other than, discounting its way into the market share. And Amit sustains his leadership right now, has the board's backing as well. But it will be very interesting to see how Asian Paints grows from here on, given the sort of derating that we've seen on the stock and the muted volume performance that we've seen over the last couple of quarters. The management stands by high single-digit revenue growth in FY26 with 18 to 20% margins, with a view that maybe in the near term there could be some disruptions out there as well. Take a short break, come back on the other side. We'll talk about all the market setup as we view it, as there is a fair amount of nervousness, the Nifty around that 24,000 mark.